Thursday, October 5th, market analysis, Stan Ehrlich. Good morning. Almost 10 o'clock California time, just a little bit past the middle of the trading day. This is about the time I usually produce my YouTube every day. And as you guys know, I start out with the stock market indexes, typically the Spider or S&P or one of them. And today it's going to be the Christmas E-mini. So this head and shoulder top that I've been talking about for probably a month now, maybe a little bit more than that. I'm going to say late August, has been acting just right, perfectly. We had a major downside breakout on September 21st. And from that point, we have been making lower lows. The rallies, a couple of them have failed. The first one right up against the neckline, classic textbook price action for a head and shoulder pattern. And I've got to mention that this 3-month head and shoulder, which started June 16th with all the indexes and the highest high, and for the E-mini, we did get 3 sell signals, one of which, of course, was on the high period day of the formation, and that's an ER bearish signal. And we caught this trade both in the ER1 and the ER3, and a complementary one just before the really sharp move down started, which was the next day. Okay, and now we have a smaller 3-week head and shoulder top pattern that is in itself the last shoulder of the 3-month pattern. Very unusual. 3-month top formation, and the last part of it is the same pattern in miniature. Nevertheless, worked great. Downside breakout, minimum downside objective, pushed it through the neckline of the bigger pattern. On we go, and we are looking for a minimum downside move to about 4,000. I may have quoted 4,010 a couple times, but they're right the same price. I'm going to use 4,000. This is a minimum expectation. I certainly hope it gets there. We have already been probably halfway or a hair more than halfway there. Halfway done. Now we're in October, and I'll just jump real quick to the October low chart here. For those of you who do not realize it, since the S&P 500 30 years ago started trading for the SPY, it has had a track record of having a significant buying opportunity during the month of October every year. This is 2015. I'll grab it and just swing it all the way as far as I can here to the right. And I'm showing you another series of years and the date. You can pause the video and check it yourself, of the low that was within, or there are 3 mistakes, not a mistake, but 3 occasions where it was just before October or a hair after October. It's got a 90% track record in the last 30 years of bottoming out in October. That's pretty darn good. I like that very much. And we're going back to 1993. And that was October 8th, October 9th, 10th, 29th, 28th, 8th, 18th, 18th. Go back to current. Okay, so why not expect it to do it again this year? Oh, heck yes. So I've pegged the price already for you. I think we've got 406, 407 for my expected downside minimum objective. And I put a circle around the time frame for October, and I squished it down somewhat. So I'd love to get inside the circle, which would be close to my objective. And I'd love to be on October 16th. That's the date I've picked, not necessarily because it's the middle of the month. So it's the angle. And actually, I'd like to go sideways a little bit more, because the last part of a down move is frequently a very fast, very quick exhaustion bearish phrase, or exhaustion weakness, we call it. We also can call it exhaustion gaps sometimes. That's a classic breakaway gap right there, for example. All right, now back to the indexes, and the spider is doing basically the same thing. The S&P 500 SPY ETF. My minimum objective is 406 down to here. We've already gotten approximately halfway. Next, and again, I've been talking about this weeks before it even broke out. Here is the DIA, minimum downside objective 324. It's coming along just great. What can I tell you? Except I think we might make new lows for the trend down today. Take a look at the short-term charts in a minute. Next chart is the Russell 2000, and these are all dailies at the moment, of course. And I have a 166 downside objective there. This one's particularly interesting. Although the head and shoulder top is doing exactly what the other ones are doing with minor variations, just simply interesting differences. This one has a downside objective that is going to be testing very, very close to the two major lows last year. That's a huge major support area. So I'm going to be looking for the Russell to bounce off of that price range, 166 down to about 162 this month. Next chart is going to be the QQQs. The NASDAQ has not even broken out of the head and shoulder top yet. It has dilly-dallied for the last week and a half, bouncing off the neckline on September 27th with a 3-day or so rally, and then it came down and tested the line again while all the other indexes were making new lows and well under the neckline at that point. So for the last couple of days, we just went up a little and then we're down a little. Again, I'm expecting it to crash below this red neckline, which I just put the little white dots on, the handles, and that's it. That's my forecast. Today's Thursday. It might even happen before the end of the week. So next is going to be the NASDAQ futures, which is extremely similar, of course, to the QQQ, and it's doing the same thing. It hasn't broken out of its neckline yet, but it's coming very, very close, and I think it's going to happen very soon. And then the minimum downside objective is 13,307 or so on the NASDAQ. I'll put that number in there later. Okay, so at the moment, on a 1-minute chart for the S&P 500, let me go to the spider, please. Come on, there we go. 1-minute spider. We're coming down pretty good again for the last half an hour or so, and about an hour almost exactly. So I think it could make new lows yet today, and it's going to start to break into new low ground fairly easily. This is a 1-minute chart. The low was only 2 days ago right there. I don't see anything that looks like a significant bottom at this particular point. Okay, let's go to the futures markets. And again, the E-mini, a little different perspective, has already entered an area of significant support, bounced off it slightly, and that was on September 27th, back up to the neckline, and now it's made new lows. Almost the end of the week. Almost a new low close to the move down today, Thursday, and therefore I'm not going to be surprised if it gets below yesterday's low on a closing basis also, maybe even today or tomorrow. It's not showing me very significant signs yet of turning around. Support, yes, but it's not holding very well. Oversold now and then, yes, but it's still making new lows. It keeps coming down. So next chart, NASDAQ, same commentary, except for it just hasn't broken out yet. So we might, I hope, get to see this one develop late, relatively speaking. Okay, bonds. I didn't really expect it to come down this much this fast a few weeks ago, but it has. It has dropped like much more than I expected. Now, that's not optimistic about rates stabilizing or going down. So now the market's worried about rates stabilizing or going up a bit more over the next few months. than a few weeks ago. Same kind of commentary for 10-year notes, of course. What can I expect out of the bond market going backward to bonds? Well, I could expect a rally up to 117.75, so to speak. And we are very oversold, and that wouldn't surprise me. But I'm not quite sure we're going to make it that high. This is pretty significant move back up again from 109 to 17, but we'll see. And the same equivalent rally will occur in the 10-year notes. Crude got to the support level I've been talking about for a few days. End of story. And today it's oversold for the first day on the way down. So one would be looking at this point for reasons to be a buyer, but I'm not necessarily telling you to get out of shorts at the moment and or go long. I'm giving you reasons. If we close above the support area, above say 83.24, yeah, that's not bad. That's bouncing out of support, especially if you closed higher on the day today. That would be a little bit better reason to consider getting out of shorts and or going long. That ain't happening yet. So keep an eye on this. Next, heating oil. Almost the same commentary, except we did not hold the bottom of support, and it is staying below the bottom of the support. That's a little bit more bearish than when I'm looking at a crude. This implies to me that it could come all the way back down to 2.6, and we're at 2.8, so that's a bit more bearish. They don't particularly match up at the moment. And look what's happening with natural gas, totally the opposite. That's a very sharp little breakout to the upside. A month and a half is not bad, but it's also getting up to overbought almost real close in one single day. Plus, it is bouncing almost against resistance again. Yeah, granted, the last time it got up there, it stayed there for one day and went boom, right back down again. The previous two occasions have stopped pretty accurately right around that price level of 3.25 and change. So why not see it do it again? It certainly could. That's how you define trading ranges. Next chart, gold keeps on coming down. New lows again. Looks like new low close again. And ladies and gentlemen, we are at 9 on the RSI. This RSI, which it is on the subgraph on the bottom, is a custom version of the standard RSI that Wells Wilder taught me himself. And I learned stochastics from George Lane, et cetera, et cetera. I started in the lecture series in the late 70s. So I knew all those gentlemen, real nice people. Now, this is all the reason I can come up with, but it's not helping yet, to look for a buy signal and have a rally that would be pretty decent. Just to begin with, I would expect an 1888 upside objective. And that's exactly what I'm going to say once I get a handle on it turning around. All I have to have today is for it to pop up and close. No, get above yesterday's high and close above yesterday's close. That would cause me to have a green bullish ER buy signal, but it ain't happening. So I got to wait. Next chart, silver, same story, except the support here, we're bouncing off the high of the range, and it goes all the way back to a great low that was in March of this year with an ER buy signal on the bottom. We got an ER sell signal on the top and the second high on the double top, both of them. We got a buy signal on the bottom of the break, and then we miss and we miss, and then we got a sell signal on the top of the rally. I'm talking the high day and low day. And then we got a complementary, and then we got a sell signal lately, September 1st. That wasn't the highest high, but it was a good signal. That wasn't the lowest low, but it was a good signal. What's coming up here? Maybe another buy green signal like we had back there on March 10th. So today's low is extremely close at 20.855 to yesterday's low of 20.850. So it's not lower than yesterday's low, but it's almost identical, close, very close. What we needed was a lower low, then a higher high, or the other way around. And the closing price needs to be above yesterday's close. Then we've got ourselves a bullish engulfing, higher close in oversold condition at support, and we don't have all of that. And I would get a gigantic buy signal. Next chart. Okay, come on. Platinum. Coming close to the same thing silver's doing right now. And I can't say we're not going to do it. The next day or two, platinum could come into the support area. It just got oversold yesterday and a little bit more today, and there's no sign of it turning as yet. It's not that oversold, just barely. So a little lower maybe, and then a turn. That would be pretty idealistic. We got a green at the bottom here, a red at the top there, green at the bottom here, a red during the top. That wasn't so good. That was perfect. That was perfect. That was almost perfect. That was perfect. That was almost perfect. That was almost perfect. So anyway, high grade copper starting to get oversold yesterday, continuing today, low and last for the little move down. But the thing that's important about this chart is it broke significant historical support going back all of this year and into a little bit of last year. I'm expecting this market now to come down and challenge probably 3.37, maybe even a little bit lower, down to 3.2. That's quite bearish, and it's going to do it maybe on a weekly closing basis tomorrow. Excuse me. So the only thing I see maybe bullish about this is the oversold condition. You got to be careful. Oversold conditions can cause it to pop back up like overnight when it's closed, so to speak, and turn a profitable trade into a losing trade real quick if you were short. Next chart. Soybeans. Support is not holding. Didn't, I should say, hold. Now today and the last 4 days, it's trying to get back up into that, what is now a resistance level, and I'll pull it to the right a little bit. So we're right there right now. This would be an idealistic spot if you are dead certain we're going to go down, and I think we are, but I'm not dead certain. But this would have a very low risk entry in a short, low risk, and a really substantial long-term bearish potential. I think it's a chance it could come down to 1070. I said 1070. We're trading at 1280 at the moment. Wow. Next, soybean oil. You know, the grain markets are all looking pretty darn bearish here. Soybean oil has a double top formation. We caught the second high on an ER sell signal, and it is the double top that is the head of a head and shoulder top. You could make a case for this being the shoulder over here. Here's the double top that's the head. It's wide, obviously. And there is the last shoulder high. Now, I have to apologize. We had 3 buy signals on the way down, and you were very hard-pressed to make any money at all, so you probably didn't with these buy signals. They just didn't work. The losses would have been pretty small, so that's a good thing. I always have a protective stop in the moment we are in a position. Remember, this is an automated trading system. When you see green and red bars or candlesticks, we can use on candlesticks as well. And there's no ifs, ands, or buts about what to do or who does what, et cetera, et cetera. You follow the rules, or you're breaking the rules if you buy or use an automated system. Now, mine does allow you to make your own personal adjustments, but then you let it free. This is a new low. It is breaking out, did break out of the head and shoulder top neckline a few days ago. The only weird thing was it popped up above the neckline 2 days ago a little bit for part of the day, but the closing prices have been on or below, and that's the important part, the neckline. I'm looking for a minimum downside objective down to this support area. They match 49.80. Next chart. Soybean meal. I can't help myself. This is another head and shoulder top, ladies and gentlemen. This is a very broad, wide, fat head and shoulder top. I've made an arch mark, and it's months in the making for the shoulder. The head of the formation is also months in the making. The last shoulder is multiple highs, just like the first shoulder and basically the head, months in the making. The neckline is drawn across, and we got that low, which started the neckline, to the exact day on a green buy signal. And there establishes the neckline for the first time, and it held on the second test, and up you go for the shoulder. And now we are dealing with the neckline in the last couple of days. This would be not a good thing if you are already short because you thought it broke out, and it looks like it could have. But on a closing basis, we really need to be obviously below that neckline. And 2 days ago, it closed on it. Yesterday was unchanged, not really breaking out. And today we have a little rally. It's up to yesterday's high, which was against resistance. So 2 days in a row now, we're stopping so far, always so far. And I'd like to see this turn down and close below the neckline ASAP. Then I've got a minimum downside objective of all the way down to about 253 on a long-term basis. But again, it's just not happening yet. Next chart. And that's a false breakout if you thought it was, sort of, but not really. Corn rallying. Now this is a little bit above resistance, but the long term is still bearish. How far up could we go? I don't know. It looks like probably 518. We're not overbought. Maybe it'll take next week to do it. It's still bearish. If we get up to resistance and we're overbought and turn yellow, I'm going to be looking for sell signals. I think this rally is about to fail soon. A little higher and a good sell signal. Next, wheat. Same comments, except everything looks bearish at this stage of the game. We did get oversold, typical periodically in a bear market. We've seen little rallies out of oversold days or a few days with the time frame, and they've gone nowhere fast. We've made new lows fast, and this is a very long-term, very bearish situation. Remember, when the war started well over a year ago, it was pretty much the day, probably right around, I forgot the exact date, March 8th of 22, that's when wheat topped out, and we did get an incredible, amazing sell signal on the top of wheat. It's a double plus limit move on that day. And it was a whopper of a signal. Hell, we're at the lowest lows for a year and a fraction since that sell signal. Next chart. Live cattle. It has been very, very good for our sell signals since March of this year. Sell signal involved in the top. I'm sorry to say it's not the high, which we love to see. This was almost a high. That was the high. And that was the high. And guess what? Don't make me repeat myself. So how far down can we go? Down to approximately 181 to support. I see that my RSI has disappeared for some reason on this chart. Give me just a couple of seconds here. And I don't even have it loaded. So that's a little weird. I'm going to have to pass on that. I know that it hasn't turned yellow yet. So we're not quite oversold, but probably very close. And we're getting close to support as well. So I'll pull up the RSI for tomorrow. The cattle market is probably going to try to bottom out around 183. About 183 looks really interesting, but the ultimate support that's very important is 182. Below that, you start to make a bigger, much bigger, longer-term bearish picture. Otherwise, there's still lots of lots of reasons to stay intermediate bullish or at least neutral. You've got to have some significant patterns and or breakouts to turn long-term bearish. It's kind of like looking at the 200-day Dow theorist moving average, which is mentioned on CNBC and the financial statements periodically as being the ultimate guide to being long-term bullish or bearish. Oh my gosh, that's a 200-day moving average. How slow can you be? No offense. Next, live hogs. Support has passed the test yesterday. Nice. heck of a good rally out of it. Exactly what I'm looking for. I talked about it doing exactly what it's doing today, and I did it yesterday. So good. How far can it go? Well, we're barely at 50, 51 maybe. So RSI is neutral as heck. Probably up to 78 again. Yeah, definitely. Next, we're looking at OJ. Unbelievable. I swear I have not seen a market for decades do something like this. I've got 52 years behind me and hopefully another 52 in front of me. No, not quite. So I'm dumbfounded. Next, Coco. Support is being reached now, getting closer. Talked about getting down to 3,311-ish, and it looks like we're going to get there. We're pretty darn close and not quite oversold. Again, last time we did get a 2 or 3 day bounce, typical, and now we're making new lows. Another 2 or 3 days after the little bounce, but not yet oversold. So we're seeing new lows in price, but not quite in the indicator. And that's my minor objective, 33.11. If we close below 33.11, we're going to drop all the way down to probably 3,077. Next chart. Coffee. It looks like it's going to break down again. Support didn't hold. It got cracked a few days ago. The bounce back up into it didn't stay there. And now we look like we're making new lows again. You know, there's a lot of markets that are heading south at the moment. That's deflationary usually. Next chart. Sugar dropping off a little bit. Not right. I don't feel good about commentary on sugar. I'm going to have to pass, except that, resistance has stopped it, but it didn't stop it very well last time. So this is now fading away as far as this little red zone is concerned. I don't know what to say. Next, cotton the rag. Resistance is stopping it. Looking very good. Sugar didn't look that way. So outside down day, bearish engulfing today. Looks like we're just about to break down to at least 83.43, 83.43, and probably down to the ballpark of 77 again. Yeah. Next, back to the E-mini. You guys have a great day. Thank you for listening and watching.